The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. At the break, we're going to have Bill Koval from WDK Analytics out of Scottsdale, Arizona is going to be our guest, and we will have him on at 9:30. Now, the first thing we want to cover here is the gold market. The first chart that I posted is what we've been watching all week, and that is for gold to get down to the 1135. So far, that's been the low, 1135. The old low that we made back in November was at 1130. The low that we made back in March came in at 1145. So we've taken that off. The reason why it's interesting here is we have this three drive to a bottom pattern that is here on the hourly charts, and then we also have the situation where you have the multiple ABCD patterns that are forming. So this is just something to look at. It's just a pattern. It's all related to risk. It's much better to buy gold at 1135 than to buy it at 1210, which that was the 61% retracement on the way down. Given the fact that the whole world is buying stocks, you probably you're going to get a chance to buy it no matter what, because the shorts are certainly in control, and the best way to handle this would be to wait to see if gold can hold these lows, and then see if it have a little bit of a bounce in here. But even the bounce is going to that's probably all you're going to get here is about a 30 or maybe $30 to $60 bounce in gold, and then we will probably be heading down. We have a monster bear market going on in commodities, folks. I mean, everything, rubber, steel, chemicals, everything is just getting hit. Crude oil, down near $49 a barrel again. But everything's wonderful in the world. The economies that they're reporting over in China is great. Chinese stock market up pretty good, so we'll see. Okay, now the first thing we want to talk about is the stock market, because we have two different markets here, folks. We have the NASDAQ has certainly broken out. We were talking about this on the other day, especially, Steve Rhodes was talking about it and others. So we're going to be looking at that, really closely here. But we've broken out in the NASDAQ, no question about it. When we broke those old highs up in that area of a 45.60, and we're up 8 days in a row right now. Now this is I know you folks already know this, but this is basically what you're looking at here is a market that has hold on just one second. I'm trying to get the chart up just a second here. Oh dear, give me a minute here, see if I can get this done right. There we go. Let's see if we can do it. Yeah, no, I can't. Just give me a second to get this chart put up. Excuse me, and then we will get it up. But it's basically, you've got these really high price stocks, Amazon and Netflix. I mean, Netflix went crazy. It's up 20% since the earnings, and that basically what that tells me is that we've got a as they say, one of these big words that Basil always uses is a bifurcated market, and so we'll see if that's going to be the case or not. But we've got this major cycle. Should have came in yesterday. It hasn't happened yet. Maybe it's not going to work at all. But we've got a situation where we've got this five-wave expanding triangle here in the NASDAQ index, and that is very, very important. We're up 9 days in a row now in NASDAQ. This equals the same move we had between April 1st and April 27th. They're absolutely identical. All I can tell you is, if you want to buy some stock, just don't buy into this emotional baloney that they're feeding us over here. You can only eat tripe so long before you realize that tripe is not nearly as good as filet mignon. So I would say hold your ground here and just wait a little bit. Even if this thing has broken out to the upside, which I certainly am not sure of yet, it certainly could be, but the overall market is certainly not telling me that. I mean, this is like what happened in 2000 when the NASDAQs went crazy up into March and the Dow had topped in January. And that could be the same situation that we have going on now. Instead of being internet stocks, these are biotech stocks. And of course, you got stocks like Amgen or Amazon. They're going nuts, and Netflix that is going nuts. But you know, it's that's just the way it is. That's all you can say. So anyway, that's what we're watching here in the stocks. Now, here's what I see. You know, here's my 2 cents worth for what it's worth. All right, I'm going to look at the New York Stock Exchange Index, which is the real market. I know it's hard to believe it's the real market, but it is the real market. And we had the most narrow ranging day in 4 years yesterday. I don't think we've ever had a day more than this is an outlier event no matter what. So hold on just a second and I will give you an idea of what's looking at it. You see that the it went into the gap. It actually filled the gap from June. And now remember, now we're going up testing the highs in the S&P without any problem at all. The old high in the S&P was 2136, and we're at 2119 right now. The New York Stock Exchange Index is making the 61% retracement on the most narrow range in a long time. You have to go back years before you can find a range this small. And the advanced decline line did move higher yesterday, which is when you got the Dow up, or when you have the NASDAQ up 85, you have a hard time finding anybody that wants to be a seller of stocks. That's for sure. So that's the one thing that we're watching really closely. The VIX index also has totally broken down. You know, this basically what they're doing is they're giving you green lights everywhere to buy stocks, and this could be the right thing. But all I'm saying is what I'm doing is I'm going to wait. They're going to have to prove it to me next week that they can go higher, because the old adage is, if it looks like a duck, walks like a duck, and smells like a duck, the odds are it's probably going to be a duck. So I just want to wait and see if this duck is going to hold water or not. The DAX index. Let's try it again. The VIX index is going to take out the low of March the 19th. That came in at 1192. We got down yesterday. We did take that out at 1187. So we've taken out that low also. So just be a tiny bit careful up into this area right here, folks, because we're in an area where we could real easily just be careful. We've got parabolic moves, folks. I mean, we have when you look at some of these stocks that have broken out here, you know, maybe this is it, you know, and it's going to go up forever. We'll know that next week. If it keeps running and running and running, you know, you'll be able to find stocks because everybody's going to be looking to buy something, and you know, that's pretty much what it is. I mean, just give you an example of what happened to Google here in the last, you know, nobody wanted this stock at 521. At 580, the whole world wants it. You know, so these are the kind of things that the emotionalism that comes in to see what it's doing. So all I'm saying is this is a Friday and an up week, so it's going to be hard for the market to close lower today. But let's wait and see what happens on Monday. That's what the strategy that I'm implying. I want to quickly go over and show you what's happening in Germany, because I always watch the German DAX, and I wanted to put this up here for you and show you where we are with the German DAX. The German DAX made a perfect 61% retracement of the high from back April. It did it with an 8-day up run. This is similar to what we're having right now in the stock market, and we'll see what's going on here. Okay, You can see the German DAX here. We topped back in April. We had 1, 2, 3 major rallies. This is the largest. It's taken us up to the 786 of the high in May and the 61% retracement of the high in April. So we'll just have to wait and see. Folks, this is a big cycle high, I think, because of all the Astro stuff that's coming in. And these things can, they can have a window of a couple of days. Now, I was looking at the 15th, and then we had the new moon yesterday, the 16th, and buying into a new moon is when the market's straight up. That is really one of the worst statistics that you can run into. First of all, when you have a market that's running for 8 to 10 days, that's an outlier event. And as you go higher, once you go higher than 5 days in a row, the odds of a correction are better than 80%. And that doesn't mean it can't go 18 or 22 or 23 days. It can do any of those things. The things that I'm saying here is just be just a tad careful in this area. That's really what I'm trying to tell you folks. And I could be totally wrong, which I have been on this breakout. I didn't think we were going to get this high in the NASDAQ, but boy, when they have the emotionalism that we've got going on in some of these markets, it's really reminiscent of what happened in 1999. That went on for well over 9 weeks before it finally turned, and then the NASDAQ gave up 87% of its value. Parabolic markets, folks, they end the same way that they go up. Now, it looks like the Chinese government has rectified the bear market that they had over there, where they lost $4 trillion. The Chinese stocks were up 3% yesterday, and it appears that everything is copacetic over there, which I don't believe that either. But we'll just let to see what the world is going to tell us of what's going on. If we take a look at the Dow Jones Industrial Average, and this is you'll see we're right over this big date that we're having right now in the market. Let me just put this in here. You'll see I've got too many things in here. It's a little cluttered, but I want to do something anyway. So hold on just a second. I'm going to invert this so you can see what really happens with some of these things, and I think that's what could be happening, but I'm not sure. So you'll just have to wait and see on Monday. The only thing I'm doing is I'm asking you to wait one more day. That's all, because if you wait one more day and we come in Friday, then come into Monday, then that's what we're looking at. So this is just a really key date this week, and we've been up 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row without a correction, and that's not a good thing usually. So we'll see. Okay. All right, we're going to have to take a little break here pretty soon. We've got the stocks are going to open, looks like the S&P is going to open a few points higher, the NASDAQ about 20 higher. We'll pay a few bills here, and then we'll be back to talk about the bond market.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back. I posted into Tiger TV the German Bund, which is equivalent to our 30-year Treasury bond. You can see it follows the patterns extremely well. We're coming into some pretty stiff resistance here, and I think the easiest way to see that is if we move over to take a look at what we're doing with our 30-year bond over the past several weeks. You'll see that we made that head and shoulders bottom down there at 48, and today's high so far is a perfect 61% retracement of the high that we made back in July. That comes in at 52.08. So whether that's going to be a major resistance or not, we'll have to wait and see. Now we're going to have Bill Koval on here in just a few minutes, but I wanted to share with you something that we're looking at in the market, because we're going to switch over to the corn market here, and the reason why is we're in the midst of a really monster big move here in the corn market, but we've had some serious negative chart patterns here that really deserve our respect. And we went short the corn on the Fibonacci 24/7 service 3 days ago when it was up around the 443 level by using the ETF CORN. But now what's happened is you can see we backed off over 20-some cents. But the important thing from our perspective is if we look at this from a pattern formation, yesterday we completed a perfect Gartley here in the corn market And now we've sold off quite a bit. Now, what's interesting about this, folks, is that you're looking at a market that is facing some of the most bullish fundamental things that we've had in a long time, and yet the technicals are starting to tell a little different story, and that may be what's happening in the stock market, but maybe it's different. I hope you realize that the quantitative easing doesn't even matter anymore. This is what the Fed wanted, I think, from all along, is it doesn't make any difference, what's going to happen. They've already told you that they're going to raise interest rates, so it's not going to be a surprise. It's not going to be a shock to the market, but it'll be the first of many interest rates increases. That's the main thing. The bonds are already telling us that. The notes have already telling us that. So that's the premier thing to keep in mind, with what you're looking at. Now we'll take a little bit of a look here with the euro. Give me a second here and we'll pull it up. We'll be opening here in stocks. We'll have another big explosive opening would be my guess. But it looks to me, we'll just do the daily first in the euro, and then you'll see the longer term when we already know that it's going to head towards par, but which is down around 100 in the euro right now. We're 108.63. There's some support 190 pips lower here at 106.80. There's a double ABCD pattern down at 106.80 along with the 786 off the March 19th low. Folks, in 2007, when we broke the August 15th low in 2007, we made a slightly higher high in stocks. Go check it out. We went from August 15th, we went up into October the 7th, took out the old high by just a very small amount, much like what we're doing here in the NASDAQ, and then it rolled over. So wait till Monday. Let's just see what's happening, and if it's really strong on Monday, we'll look around. We'll buy some. We'll try to buy some stocks that could possibly go up during this move here. But you gotta, I think you just have to wait a day. That's the main thing. There's so much emotionalism, and that means you're going to be selling the VIX index down here in the hole if you're buying stocks, and boy, that's just not very smart. But it is smart when they go up, I guess, but that's neither here nor there. So that's what's happening with the euro. I wanted to show you, which we show this all the time, but where we're looking at the longer term picture here in the euro. Nothing has really changed, and we had this low in March. We went absolutely nowhere, and this thing has got 99, and that doesn't mean it's going to stop at 99. That just means that's where three major targets come together, much like what's happening with gold right now at 1135. That doesn't mean it's going to stay there. It just means that that's the possibility of that pattern completing. So we'll have to wait and see, but interest rates are going higher. The Fed's going to raise rates, and it's just a matter of time. It won't be a shock. That's the ideal situation for the stock market, because no one really cares what happens to interest rates now. They're actually expecting them to go up, which they've already been doing. So that's the bottom line of what we're watching. I just think with these commodity prices as low as they are, with the Dow Jones transportations, if you look at that, that is just a flat out bearish picture. I'll post that, then we'll have Bill Koval on at the break, God willing.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Bill Koval on the line. Bill, are you there?
Yes, I sure am, Larry. Can you hear me?
Absolutely perfectly. Now, we've have chart number 1 set up for you. Do you want to tell us what this is and what you're looking at?
Yeah, Larry, just to step back a second, back in the market top in 2007, you probably, along with many other attendees here, have seen the the broad market average compared to the advanced decline line, where leading into the top, the AD line was diverging from the major indexes. And I had been doing some recent research on some internal metrics, which I always carry in the daily and weekly edition of my newsletter. The advanced decline, both volume and issues, along with new highs, new lows, and the percent that NASDAQ and New York issues are above the 20, 50, 100, and 200-day moving average. So in chart number 1, we're looking at the the broad market run from 2009, and as such, why you can see a little bit of divergence creeping in now. We just look at the price line, of course, for the ES continuous contract, and it's starting to instead of spending a lot of time above the midline, it's starting to dip below, and in particular, the inset you can see has worsened that trend, if you will. So on chart number 2, that is a comparison of the same line, looking at the percent issues, New York NASDAQ, above the 150-day moving average. And I just threw this chart up some time ago, and it just popped again, and I remember seeing that advanced decline line, and here again the same divergence is happening, whereas from the 2009 bottom we popped right up to a huge level, over 90% issues advancing compared to the 150 moving average. So basically I kept looking into it, and the reason in the note that you see there simply largely relates to the fact that these moving indexes that we have are kind of artificial constructs, in that they're all stuffed with the high flyers, so to speak. New York Stock Exchange added Apple here within the past year, and they kicked out, I forget what they kicked out, but the S&P does that also, and the Russell just got rebalanced and kicked out the good movers from the Russell 2000 up into the 1000. And as Barron says, they moved the 1000 issues down to the 2000. So they said it, they implied that a great trade going forward might be to short the Russell 2000. And in fact, I put on a bear Russell 2000 ETF here just the other day to take advantage of that. But back to the illustrations here on that's number 2. Number 3 looks at the same comparison of a little bit narrower view of the market from October 14 to the present, and we're comparing the skew index, the NASDAQ skew, which essentially is a term structure look at volatility. And you can see there that in the lower left-hand dot is a real dip in the market back in October 14, where we had, I think it was the first interest rate scare here in recent history, at least. I'm talking about the last year or two. And then the green dot just to the right of it shows the the subsequent peak in late November. Well, since then, the skew has kind of been all downhill, if you will, and again, it's diverging negatively from the ES futures, which itself in the last stretch here from March is seemingly deteriorating in terms of momentum, if you will. Let me stop here for a moment and see if you have any questions, or if you take questions from readers.
Oh, we certainly do. And one of the questions we have coming in is that these statistics, that you're looking at are quite impressive. And basically, the person is asking, your bottom line is that the internals of the market are not nearly as positive as what the price action is saying. Is that what you're trying to get across?
That's pretty accurate. But things are a little bit more nuanced or complicated than that, in the sense that, when it comes to playing the index, you can't bet your money just on the divergence of the internals alone. I, as you know, have been bearish for some time, and fortunately, a lot of the picks I've done have worked out in terms of timing, but from a broad construct, why the market keeps going up, and I still remain bearish. And so I've gained a respect for following some of the broad, averages and looking at longer time frames and not just short-term divergences. So, and in my offer today, if folks that are tuning in want to sign up for my free newsletter, I'm going to send them out an illustration of that fact. I'm tracking a new moving average and a moving average cross system that seems to give a pretty good view. In other words, it tracks real price. It can't let you. It doesn't let you forget that price is still going up. I mean, so we can't ignore that. Yeah, the internals are diverging, but you can't bet the farm on that either. You have to
for sure.
Look at a lot of things.
Yeah. We put up chart number 4 for you now if you wanted to go through that and tell us what you're seeing here. These are pretty much, they're different ways of looking at it, telling pretty much the same story. Is that correct?
Yeah, that's pretty accurate, Larry. In chart number 4, we're looking at again a more recent view of both the linear regression line of the futures contract, as well as comparing that then to the percent of the percent NASDAQ New York issues above the 150 line. Now, I don't think in this series I've got the I think I've got a comparison here later to the, let me just check it, to the 50 line. Yeah, I do. The next one, number 5, is a shorter. But this same relationship that you see here in chart number 4 of the 150, it shows up in the 100-day moving average comparison, the 50. You, of course, have to look at the narrower time frame, which we're doing here. And I've just thrown up a few moving averages there just to reiterate the fact that that 150 comparison is going down even as price is continuing to hold in there. Price is looks like it's struggling a little bit here. This chart, by the way, doesn't include the last 2 days of trading. So that last bar is now up to 2120 or thereabouts.
Okay, now we've got number 5 up now.
Okay.
And you want to tell us what you're seeing here on this one?
Sure. Here again is even a narrower look. We're looking at just 2.5 months or 3 months worth of ES futures. And there you can see we're looking at a definite downtrend channel, if you will, and notably with the last action in the last couple of days, it's actually penetrated that upper downsloping red channel, and we're comparing again the 50-day, the percent of the issues that are above the 50-day average, that keeps declining as well, so that here back in late April, we had as many as 68% of those New York and NASDAQ issues trading above their 50-day moving average. Now, we're down to 45% in the chart. It's up to about 50% roughly in the last day. So it has bumped, as has price. But nonetheless, we're looking at at negative divergence, pure and simple, even on the short-term time frame.
Okay, now what we're going to do here is we're going to post up. You have a special offer for the folks here at TFNN where you're going to give them some information about your newsletter to get the free newsletter, copies of today's charts, and you're also going to give them the your moving average crossover method for predicting price swings. And your website is, well, your email address is info@wdkanalytics.com. That's WDKANALYTICS information at wdanalytics.com, and that's Bill Koval, and you'll be able to come in. Now, Bill, I have a special request. Is you do a lot of work. You know, I've met you several times here, and I know you do. You're really an avid researcher, and what I'd like for you to do, if you see something that you really like to get across, you know, please give me a call, and we'll have you back on the show, and you can give us your views of what you're looking at, because you do a great deal of work, and it's to be respected. So I would hope you'll do that in the future.
Yeah, I'm happy to do that, Larry. And you know, if folks sign up for the free newsletter, they're going to understand, you know, these kinds of divergences are just one of the entire picture that we look at, and we do take a deep dive into the internals and analytics, which I love to do. I've always got my face in spreadsheets, so I'm always turning up new things. There's other stuff I could talk about today, but yeah, we'll save that for another time. Also, I'm going to have a landing page by then where, you know, folks can just click, and they won't have to email me. They can just click on a link and then sign up for the newsletter itself. So we'll make it a little bit easier.
Okay. Well, listen, thanks for coming on, and we hope to have you on in another few weeks, okay?
Thanks, Larry. Great to talk to you again.
You bet. That was Bill Koval of WDK Analytics out of Scottsdale, Arizona, where we'll have a balmy 107 degrees today, getting ready for the Tour de Taco Bell that they have every year in July. I'm a 5-time finisher. I've always finished within the top 25 finishers there, where you get the you know, the 25th finisher, you get a chartreuse ribbon as opposed to a yellow or blue or red or gold. Anyway, this is what we're looking at here, folks. We're going to take a look here at the market here one more time. I wanted to see how we're opening here with the New York Stock Exchange Index. Having that narrowest day of the year, day of the year of the last 5 years. It was the narrowest day, and of course we gapped down today, and hard to believe that that could possibly happen on a day like today, but we'll have to wait and see. As you can see, we did open a little bit lower, and if we should happen to have a wide range down today in the New York Stock Exchange Index, would be short of a Mother Teresa coming back to visit us, or even her predecessor from 0 BC. Then that would be a big thing. But right now it doesn't mean too much. But that narrow range day yesterday was really something. The advanced decline line did improve. It didn't take out previous highs or anything like that. The VIX index did make a new low over the last 5 months, telling you that the lights are green. Buy all the stock that you want. And all I'm asking you is wait a day. That's basically all I can say. And I'm just patterns. I don't understand the fundamentals, but common sense will tell you that if you got falling commodity prices for 18 months, and now they're going down even faster, with you know, crude oil near $50 a barrel, and gold and silver making new monthly lows. You know, iron ore is doing that, aluminum's doing that, rubber is doing that. You know, people are not, you know, they're not buying stuff to make stuff. And if you look at the Dow Jones Transportation, we're in a major downtrend, and we just had a 5-day rally that didn't go anywhere. So let's wait here, take a break, and we'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to take a look here. The gold-silver index. As you can see, going back over the last 6 months, we're making a big butterfly pattern here in this gold and silver index. That's we've taken out the October lows, we've taken out the March lows, and we're completing this big ABCD that's down here that's equivalent to 1135 in the gold. Now, that doesn't mean gold's going to stop at 1135, but you know, if you look to be a buyer the next day or so in gold and silver, if they hold this level, they could have a pretty substantial rally, because this is the target we've been looking for quite some time. We gave up our bullish stance on gold up around the 1232 level because we couldn't get above that 61% retracement level, and since that time we've had a series of lower highs, you know, all along. We had a question during the break while Bill Koval was on from WD Analytics about the corn market. Rich Anderson, you know, I spoke with him 2 days ago, and, you know, the corn crop is certainly in some type of major distress, but the prices are telling us that there's people in there willing to sell it. And that's the main thing that you want to keep in mind, because the price action is what really makes you discover where you are with this. So keep in mind that is the thing, because we always know the news is the most bullish at the top and the most bearish at the bottom. All I'm saying is we're down here to some support. The old low we had in gold was 1130. We'll probably take that out today, or very closely do that. The old low on silver was 1410. We're still 70 cents away, but that could easily happen. So we're watching this very, very closely. We still have this big cycle that we're looking at that should have come in on the 15th or 16th. It did on the Dow Jones, but it has not happened yet, on the NASDAQ. The NASDAQ is still very, very strong. It's within a few points of its high. So there's hardly any reason to think that it's going to turn yet today, but you'll have to wait and see. When you've got these 100 triple-digit stocks that are in the NASDAQ 100 that make it go nuts, it's pretty hard to stand in front of that freight train, boys and girls. So live every day in an attitude of gratitude, and may God bless, and all I ask you to do is wait one more day.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.